All right, so it's 8 p.m. now. So let us start our webinar today. So today we have actually invited one of our veteran investing node user, and he is also a trading representative from Phillip Capital, which is Dan Chang. So today he will be sharing on how to identify high potential stocks. So in today's sharing session, right, we'll be talking about three things that you should not miss out while identifying stocks. So as we all know that this year the stock market has been really bad performance. So today we have invited Dan to come and share with you on some of these techniques on identifying stocks so that we can actually regroup and actually readjust for next year market. So before I start the whole webinar, so just a quick sharing here. So we have actually a Telegram group which is called the Stock Market Buddies, where we will be sharing some of this information, and it's actually a group where a lot of investors can come and share some ideas and also some insights about stock market. So if you are interested, take out your phone and scan the QR code on your screen, which is the Stock Market Buddies, and you will enter into our Telegram group. All right, so without further ado, let us welcome Dan for the webinar. Yeah, Dan, are you ready?
Hey, hi, thanks, Daniel. Okay.
Right.
First of
pass the time to
all,
you.
yeah, sure. Thanks, Daniel. Daniel, can you let me share screen?
Yeah, sure. Let me stop my sharing first.
Okay.
Yep, here you go.
Okay, let me see. Okay, can you all see the screen? I suppose so. Okay, good evening, everyone. First of all, I would like to thank all of you to take out your precious time to spend the evening with me. I hope that most of you already have your dinner, okay, because it's going to last you for about 1.5 hours, and it will last you about 9:30 lah. Okay, so today's topic is on a quick guide to identify potential stocks. Okay, actually, when the good people from Investing Node Malaysia team invited me for this webinar, we will actually have a Zoom session to brainstorm to see how we can bring out a topic that will value it to you guys and give some extra value to you. Okay, so as you all know, right, because this topic about identify potential stocks. Okay, if you go to Google, right, if you go to YouTube or Google, you just Google identifying potential stock, there'll be hundreds of videos, hundreds of links to tell you on how to identify potential stocks. Okay, of course, all of them have their merit. Okay, but the thing is that while some of them work for one group of investors, it may not be applicable to other people because everyone is different. Okay, so different folks, different strokes. Okay, so certain method, well, is useful to say a person with a conservative attitude may not be suitable for someone who have a high risk appetite. Okay, so what are some of the ways that actually you can use to identify potential stocks? So in this webinar, right, I will be sharing 3 very simple and effective ways, okay, to identify all these potential stocks. They may not be the best and only way, but I'm sure they will add value in your learning journey. Okay, so before I start, for those who may not be familiar with me, let me do a very quick introduction. I will not waste too much of your time. Okay, so basically, I'm a broker with Phillip Security in Singapore for the past 21 years. Okay, so I joined Phillip Capital in 2001, straight after graduating from National University of Singapore, and I've been there since lah. So my resume is very boring. Okay, so basically I do traditional stockbroking, but in recent years, right, as the landscape evolved, as investors become more sophisticated, I have been doing some security advisories and some managed account and some robos as well lah. Okay, so I'm presently a verified professional in Investing Node. Okay, and this is very important. Okay, because nowadays there are so many scammers in the market today. So being verified by Investing Node is actually an honor to me, and I'm glad Investing Node has done that. Okay, and at least you know who I say I am, and I do what I say I do lah. Okay, so if you are looking, let's say I understand that the audience are mostly Malaysian. So if you are looking for a broker in Singapore, at least you know that I'm here. Okay, and I'm a real person. I'm not a semi scammer or what. Okay, so I'm very active in this IT Traders Club. Okay, so this is the very first club. This is the very first group that was set up in investing mode. And of last count, right, it boasts about 7,000, more than 7,600 members. Okay, so I post virtually every day there. Okay, so if you have any question or anything in future, if you want to look for me, you can always go there and find me. Okay, and if you are too shy to post in a forum, you can take out your handphone now and scan the QR code on the right bottom corner to add my handphone number to your handphone. Okay, to your handphone contact list. Okay, so I shall not waste too much time here. So if you want to find out more about me, please go to this website, bit.ly/ttp/10. Okay, and I'm on LinkedIn. So if you want, if you wish, please connect with me. Okay, I'm an open connector. Okay, disclaimer. General disclaimer, basically three things lah. Okay, first of all, this is for educational purposes. Two, it's not to recommend any stocks or to push any financial products. And thirdly, whatever view that is shared in this webinar is solely my own view. Okay, so now we are done with all the formalities. So let's start. Okay, this is something that I always like to do so that you guys will know what this webinar is about, and I also want to manage your expectation. Okay, so this sharing, right, basically, okay, everything that this sharing is that we are identifying potential stocks for investment. Okay, it's not for trading. Okay, there is a very big difference between trading and investment. For trading, right, usually traders will seek to earn the price differential in the movement of the price. Okay, whereas for investing, we really, you know, as an investor, we really go and research on the company. Okay, we go and do our due diligence. Okay, then we go in and buy the stocks for mid to long term. Okay, so this webinar, this sharing is purely for identifying potential stocks for investment. Okay, not trading. Okay, and today what I'm going to share is not something that is a rocket science or something that's very chim one. Okay, in fact, you'll probably know what I'm going to share later, because all these terms you might have heard before. Okay, but I'm just trying to reinforce the knowledge within all these points. Okay, because as you know, I'm a broker. Okay, so every stakeholder in the market have a role to play, and for me, right, as a broker, my role is to break down all these complex information into very simple terms. Okay, and pass it on to retail investors. Okay, so my webinar is all about simplicity. Okay, so this webinar is also not any get rich secret manual. It's not any Ulingiti or anything. It's not sure win. It's not guaranteed. Okay, it's purely for reinforcing knowledge. Okay, and we are not going to do any financial analysis or dissecting any financial ratio here. Okay, we leave that to the analyst. Okay, because that's their job. Okay, as I mentioned, every stakeholder in the market have their role to play. Okay, financial analysis, we let the analyst do it. Okay, we make use of whatever they find out to help us in our investment. Okay, because we are the investor. Okay, and last but not least, one thing I want to highlight is that there is no one method of just identifying potential stocks. Okay, there are a lot of ways, and there's no one single method that can use individually. Okay, you have to use it collectively. Okay, meaning that you need to have at least two or three points that have a confluence. Okay, before you say that, oh, that stock is a potential stock. Okay, not just because one indicator say, oh, that's a potential stock, then you still jump in. Okay, that is not the way we investors should be lah. Okay, and of course, this webinar is purely for sharing purposes. If it works for you, that's great. Okay, if it doesn't, just take it as a part of your learning journey lah. Okay, and if you already know what I'm going to share later, okay, just take it as a refresher. Okay. Okay, basically, what happened is that identifying potential stock, if you type inside the YouTube, okay, you'll see more than hundreds of videos on this topic. And I can say that most of them are purely on technical analysis. Okay. However, before we even go to technical analysis, I personally think that we need to set some basic criteria first. Okay. I mean, the chart can look good on a very lousy company. Okay? It can look good on a very loss-making company or company on the brink of bankrupt just because of some news or whatever. Okay. But that does not mean that that is a potential stocks. Okay. So we need to set some basic criteria from a fundamental perspective. Okay. So that is the very first step that we need to go through before we go into identifying potential stocks. Okay. After we do that already, okay, the second part, we will then look at the chart. Okay. When we look at the chart, basically, I don't know how many of you know that actually for technical analysis, right, there is a difference between a technical indicator and price action. Okay. Usually when we talk about technical analysis, we hear about stochastic, RSI, oscillator, trend line, support resistance. But which of them are indicator and which of them are price action? Okay, later I will go into that in depth. Okay, and the last but not least, right? Okay, after you have your criteria of the fundamentals and you have looked at the chart, okay, the next thing you should look at is if the company has any potential catalyst or not. Okay, take note. Okay, for financial, for this fundamental analysis, right, FA, right, we are taking information from the latest full year annual report or maybe the latest quarterly earning. Okay, so that's in the past. Okay, and for TA, we are basically looking at the historical chart. Okay, the historical chart. So FA and TA, we are talking about the past. Okay, but the past does not represent the future. Okay, so when we come to identify potential stock, right, another thing that we need to look out for is actually this thing called potential catalyst. Okay, because it's forward looking. Okay, it's something that's going to happen in the future, in the near future or far future. Okay, but at least there's something to look forward to. It may or may not materialize, but the market will react to that catalyst accordingly. Okay, so what is catalyst? Catalyst means that through the company announcement or some company or reliable news source that the company is undergoing something, or there's some news, or there's some corporate action that the company is going to take. So these are potential catalysts. Okay. So okay, let's move on. Okay, this is going to be a bit boring here, so bear with me for 5 minutes. Okay, I'll bring this over very fast. Okay, so because this is very basic, but this is also very important. Okay, so the first thing we need to look at is actually the criteria of potential stocks from a fundamental perspective. Okay, so just now I mentioned already. Okay, a chart can look the chart of a very badly managed company can look great, okay, but that does not qualify the company as a potential stocks, okay, because if the company is doing very badly in terms of the bottom line, okay, more often than not, your investment will go sour in the mid to long term, okay, because the movement in the initial stage would likely to be a flash in the pan. Okay, so some of the fundamental criteria that usually we set is that number one, okay, it's best to be a profit-making company. Okay, of course, if it's loss-making company, the sustainability is not there. Okay, I mean, how many years of loss can a company tahan? Right now, I mean, if the company keep losing money, no matter how good the share price goes up or how good the chart looks, okay, there will one day when the reality will strike and the price will drop. Okay, so profit-making company is preferred. Okay. Secondly, okay, net positive cash flow. Okay, net positive cash flow, it means that because for financial statement, right, usually there are three types. Okay, one is the income statement, one is the balance sheet, the other is a cash flow statement. Okay, so look for company that have a net positive cash flow. Okay, why? Because if the company is making profit, but they keep having cash flow problem, okay, so how are they going to survive? Okay, they have to have at least a positive operating cash flow. Okay, operating cash flow means that the cash flow from their usual normal business. Okay, so at least that proves that the business is viable, is sustainable. Okay, so positive for operating cash flow is very important. Of course, it's good to have a net cash flow overall. Okay, then for company that have a negative cash flow, right? Usually the only way is that they have to go into debt. Okay, that in this case, in my case, I refer to debt over shareholder equity lah. Okay, so of course, different company in different sector, okay, have different threshold of net gearing. Okay, but as a general rule of thumb, okay, a debt ratio, a net gearing of about 20 to 40% is roughly there lah, it's acceptable lah. Anything that is more than 40% or 50% is actually a red flag already. Okay, so that stock you may want to KIV it, monitor it before you really term it as a potential stocks. Okay, so these are three things that we need to take note from a fundamental point of view. Okay, but we must also understand that sometimes it's not through the company themselves that they fall out of these three criteria. Okay, a very good example is the recent pandemic in 2020. Okay, so the criteria, there will be some exception. Okay, during the pandemic, right, almost every company is making losses, maybe except for growth maker and healthcare sector. Okay, almost every company is losing money. So how are we going to identify which stock, or rather which company during a pandemic is a potential company? Okay, so there is a few things that we can take note. Number one, this is what I call invisible hands. Okay, invisible hands is actually an informal term in financial market to suggest that there is some forces of support. Okay, in Singapore context, right, usually we mean government support. Okay, one very good example is SIA. Okay, actually, when during the 2020 March, I think, okay, when all the country are closing out their borders, okay, and with Singapore also closing up, SIA is actually in a very, very good position. Okay, it's almost I mean, I can safely say that without government support, we won't have SIA today already. Okay, at that point in time, SIA is looking very bad. Okay, cash flow is negative, is starting to make losses. Okay, there is a huge debt because their oil hedge is not doing very well also. But just between the March 2020 to June 2020, just in that 3 months, right, our government, or rather the Singapore government, has came out during the Chinese New Year rally, Labor rally, Labor Day rally, and all these formal and informal speech to show their support for SIA. They even have the undertaking to take in all the rights that is not being taken up by other shareholders. Okay, so this is the form of government support. Okay, and this is a sign that this company, okay, is still fulfill the fundamental criteria of being a potential company. Okay, so invisible hand, government support. Okay, so that's one thing you guys want to take note. Okay, the other exception is net cash. Okay, this one is maybe more applicable to a few company only. Okay, not a lot of people have a lot of net cash. Okay, I give you an example in Singapore context as well. Okay, during the pandemic, right, in 2020, as we all know, border closing, there's no tourism. Genting Singapore is actually doing very badly. Okay, RWS, there is no foreign tourists. Okay, there is also no local because we are also having a lockdown. Okay, so they are actually making losses already. Okay, but one thing that you guys may or may not know is that actually Genting Singapore is very, very cash rich. Okay, from 2020 until now, okay, they still have more than 3 billion worth 3 billion cash and cash equivalent. Okay, cash and cash equivalent. Okay, so they have a lot of cash. So basically throughout the whole pandemic, they don't do any right issue. Okay, they don't do any equity financing. But you look at the share price. Okay, they dropped from 90 over cent down to I think about 58 or 59 or 60 over cent. Today they are back at about 92 cents. okay, without any equity financing or taking on any debt. Why can they survive for so long? Because they have a lot of net cash. Okay, so net cash is also something, is also an indication that the stocks could be potentially a good stock. Okay, so it fulfill the fundamental criteria. Okay, so okay, now after the fundamental side, right? The normal boring side. Okay, now we look at these technical side. Okay, just now I said earlier, right? Actually, for technical analysis, there are actually two types. Okay, one is called technical indicator. The other one is what we call price action. Okay, so what is a technical indicator? A technical indicator is actually a pattern-based signal, okay, that's given out based on the price or the volume of the shares of the stock, okay, of the stock in question. Okay, so it's not it is being set up by someone, like for example, Bollinger Band is being set up by Bollinger, some oscillator is being set up by some oscillator. Okay, so these are what we call technical indicators. Okay, and for these technical indicators, right? Today, I'm going to share with you guys a very simple one, and I believe you all have heard before. Okay, that's called moving average crossover. Okay, before you guys question, why then? Why are you someone with more than 20 years of experience in the financial market want to share something or want to use something so simple, moving average? Basically, everyone know what is moving average, what is moving average crossover. Why would you want to use this when you have more than 20 years of experience? Okay, I'll come to that later. Okay, before that, for the benefit of those who don't know what is moving average, let me quickly take 1 or 2 minutes to just go through. Okay, so basically, moving average crossover, right? Moving average crossover is one of the most widely used indicator. Be it whether you are a forex trader, whether you trade in index futures, you trade in stocks or anything. Okay, moving average crossover is often used even by advanced trader. Okay, advanced trader use it as a complementary indicator. As I mentioned in my basis of sharing, right? Okay, a good investors or good traders, right? We don't use a single technical indicator or technical signal. Okay, we usually use it collectively. Okay, we use 2 or 3 or even 4. Okay, so moving average crossover is very widely used by even advanced trader. Okay, and but one thing is that it is often a lagging indicator. Okay, what is a lagging indicator? Okay, maybe just for the benefit of those, okay, for those who are trained in statistics, okay, you will know that what is moving average. Okay, but for those, right, who are not trained in statistics, okay, moving average could jolly well just be a line on the chart. Okay, so just give me 1 minute to very quickly show you what is called moving average. So you look at this chart here, right? Okay, so basically, let's say for example, a 10-day simple moving average. It means that you actually add up the price from day 1 to day 10. You add up together, you divide by 10 to get an average, and you plot 1 point. Okay, 1 point. Okay, then you use day 2 to day 11. Okay, and you get the average again, you get another 1 point. Okay, and you do it for the 3rd day to the 12th day, so on and so forth. Okay, so by plotting all these points together, you will form a line. Okay, and this line is what we call a moving average. Okay, so why is moving average crossover a lagging indicator? Because it is always looking behind. Okay, it has to happen before the moving average, the signal will come out. Before the moving average crossover signal will come out. Okay, because it's always looking at the data that is past already. Okay, if it's a 10-day, it's a past 10 day. It's a 50-day, it's past 50 days. Okay, so one of the pullback in this moving average crossover is that it is almost impossible to catch the lowest point. you won't catch the lowest point using a moving average. Not to say a moving average crossover, even you use a moving average, MACD or whatever, you will never catch the lowest point one because it is formed using data that is from the past. Okay, which is why in fact a lot of technical indicator they are all they are mostly, I won't say mostly lah, maybe some of them are also lagging indicator. So when you want to use your own indicator, you have to make sure whether you need to consider whether that is a lagging indicator or not. For me personally, right, I'm not I'm more of actually I'm more of a price action person now. Okay, but I do use indicator to reinforce my investment decision. Okay. Okay, so what is a moving average crossover? Basically, very simple, okay, very quickly, okay. A crossover occurs when a faster moving average, that is a shorter one, okay, the more volatile one, cross a slower moving average, which is a longer period one, okay, whether cross up or cross down, okay. Because today's topic is identifying potential stock, so mainly I'll focus on crossing up lah. Okay, so in stock trading, right, the meeting point, when the point where the faster moving average cross the slower moving average, that is what we call a signal. Okay, a signal to buy. Okay, so a chart pattern, okay, when a short-term MA cross a long-term MA, this is what we call a bullish breakout pattern. Okay, and to reinforce it, right? Okay, first of all, I need to qualify myself. Okay, no single indicator is 100% reliable. Okay, this is one of the most reliable, but it's never 100%. Okay, so to make it more reliable, okay, when the short-term MA cross the long-term MA, okay, it would be good if the long-term MA is outward sloping. The steeper the slope, the better. Okay, conversely speaking, okay, when a shorter MA cross below a longer MA, okay, going downwards, that's a bearish pattern. Okay, and is very bearish, okay, if the long term, or rather the long term MA is also downward sloping. The steeper the slope, the more reliable the moving average crossover the signal is. Okay, and it will be reinforced by high trading volume, which means that it will be even more reliable, okay, if the cross is accompanied by high trading volume. Okay, so this is some of the things that some of very basic thing lah. So all these are very dry. The more interesting part will be behind lah. Okay, okay. So now coming back to the question just now. Okay, why do I use a simple technical indicator as simple as moving average crossover? Okay, okay. The truth is this: the stock market, okay, is a collective, is a marketplace of buyer and seller. Okay, so the more buyer there is, okay, the stock price will go up. The more seller there is, the stock price will come down. In a very simple illustration. Okay, moving average crossover is a widely used technical indicator. Different people look at the same chart will have different interpretation of the chart. Okay, some may think that it's time to buy, some may think that it's not time to buy. Okay, but okay, if you are using an indicator that most people are using, okay, it means that it's a very likelihood that if you guys take action on the same signal, okay, the stock price will go up. Okay, if you take action on the same signal, because you are using the same, you are looking at the same chart, you are using the same technical indicator. Obviously, the chances that you have the same signal is very high. Okay, so that is one reason why we always I mean the good investors will always tell you use the simplest technical indicator. Okay, I'm not saying that the more cheap one like what Allied wave theory, what oscillator or things like that is not good. They are good also, okay, but they have to use collectively. Okay, but personally, I prefer using moving average crossover. Okay, and okay, using the same technical indicator is not enough. okay, you need to use the same parameter. Okay, as I just explained earlier, right? Moving average crossover consists of two moving average lines. Okay, the parameter that I use is 50 MA and 200 MA. Okay, why 50 and 200 MA? Because this is the most common parameter that most people use for mid to long term investment. Okay, so if you use the same, if you use the technical indicator that most people use, and you apply the same parameter that most people apply, likelihood is that most of you will get the same signal. Okay, and if everyone take action on that signal, likelihood the buyer will be more, the demand will be stronger, and the stock price will move. Okay, so it's all about investor psychology. Okay, so a lot of people when they look at chart, right, they always say, oh, because moving average cross here to there, or because RSI is below 20, or stochastic is below 20, oscillator is this way, that way, that's why I need to buy. Okay, no, that actually they are all interpretation of the investor psychology behind it. Okay, so these are very important things. Okay, and okay, for me personally, right, I also use price as part of my parameter. Okay, just now, okay, I do some very boring stuff. I have to explain what moving average is, okay, because of this thing. Okay, so just now, as I explained what moving average is, right? So moving average is actually a smoothening of the price. Okay, so actually price itself is also a MA, is also a moving average, is 0-day moving average. Okay, because it is price itself. So actually price itself is a 0-day moving average by itself. And later, I will go to the chart and show you why I use it and how I use it. Okay, and as a rule of thumb, right, just now I mentioned that as long as the price or the 50 MA is above the 200 MA, is actually on the uptrend. Okay, conversely speaking, if 50 MA is below 200 MA, it is usually on a downtrend. Okay, and I can show you why is that so. Okay, so now maybe what I can do is let's head over to this investing mode chart and maybe take a look. Okay, so this is the chart of Sampawang Corp. Okay, give me a minute. Let me minimize this video so that I can see the whole chart, because my screen is actually blocked by the window. Okay, so you see, this is the chart of Sampawang Corp. Okay, if you notice something, right? Okay, the green line is actually the 200 moving average. Okay, and the red line is the 50 days moving average. This is the parameter that most people use. So if you realize, right? Whenever the 50 MA is above the 200 MA, okay, usually it will be uptrend. Okay, you notice that usually is on the way up, as long as the 50 MA is below above the 200 MA. Okay, and conversely speaking, right? Whenever the 200 MA, or rather 50 MA is below 200 MA, usually it's on a downtrend. Okay, it's on a downtrend. Even if you were to buy here, okay, you end up losing money because it will always be a downtrend. So whenever this for long-term investment, as I mentioned earlier. So as long as you see the share price at the 50 MA is below the 200 MA, even when the price becomes very attractive, there's no point for you to really jump in, because the overall trend is actually down. Okay, the overall trend is actually down. Okay, so conversely speaking, right? Okay, when we see the let's zoom in now. Since today we are talking about identifying potential stocks, let me show you this. Okay, so you see, when the 50 MA is above the 200 MA, okay, and most of the time, or rather 90% of the time, I will say that it's on the uptrend. Okay, this is very reliable. If you don't believe me, later after this webinar, you just go to investing node. Okay, just plot any chart. Of course, the chart, the company must satisfy the fundamental criteria. Just plot any of the chart, and you put the 50 and 200 MA, you realize the same thing. Okay, that is whenever the 50 MA is above 200 MA, it tend to be uptrend. Okay, okay. I want to share with you all something that is actually outside the scope of these webinar. Okay, so this webinar is about identifying. Okay, sorry, I spell wrongly. Identifying potential stock. Okay. However, okay, this webinar did not include the entry and the exit. Okay, I mean for the audience benefit and for the audience just to share for the audience benefit for the value okay, I'll touch a bit on the entry. Okay, you see just now I said as long as the 50 MA, okay, the 50 MA is above the 200 MA, it is bullish. Okay, it is bullish, which also means that if you buy here, okay, sorry, if you buy here, even if you buy at the top, even if you have buy at the top, okay, over time, you will still make money. Okay, at this point, right? Okay, maybe we can take this as a Tesla. Okay, so this is being created sometime in October, about below 360, about 350 plus. Okay, then now the share price is about 337. I believe in a few months' time, they will go above this level as well, as long as the 50 MA stay above the 200 MA. Okay, so we can I mean if the investing node Malaysia team ever invite me back for another webinar, maybe I can touch on this again as well. Okay, so as you can see, it's like that. Okay, but the thing is that this is not efficient, right now. I mean, yes, the topic is about identifying potential stock. Okay, but it doesn't mean that just because the 50 MA is above the 200, you need to buy. Okay, sometimes you also need to time your entry. Okay, so this is where I'm going to share now on this entry. Okay, maybe let me just widen up the chart so that you all can see properly. Okay, so just now I mentioned already. Okay, price, okay, itself is a 0 MA. Okay, 0 moving average, 0 days moving average. So when we say a faster MA had a slower MA from bottom to top, and when it's sloping up, it tends to be a bullish point lah. Okay, so in this case, right, when we see such a thing, right, you can actually, okay, when I say, okay, 50 MA is about 200, you can monitor the stock first. You don't need to buy immediately. Okay, and you wait. Okay, you can wait until like when the price cut the 50 MA. Okay, so that will be a sign that a good entry sign to so-called be more efficient. Okay, so you won't end up buying here lah. Okay, or even at this point, you see they touch it because 50 MA is so-called a support as well, because moving average is always moving. Okay, so this one is also a good entry point, and obviously here and here. Okay, when the price cut the 50. Okay, here as well. Okay, here as well, if you notice. Okay, okay, one thing I want to share also is that whenever the price touch the 200 MA, okay, touch the 200 MA, okay, but they did not break, is also considered as a form of a support. Okay, so these are the few points that you can take a look. Okay, okay, maybe some of you will ask, hey, hi, Dan, you said that 50 MA above 200 MA is bullish. Okay, so when 50 MA cut 200 MA, it should be bearish. Why is the price not dropping here? Okay, why is the price not dropping here? Okay, as I mentioned earlier, nothing is 100% reliable, but I do have an explanation for this because as I mentioned just now, right? Okay, if this is a long-term MA, right? If the faster MA, if the short-term MA cut the longer MA when it's sloping down, okay, I mean it's a sign lah, but it's not so reliable. Okay, the more reliable is when the shorter MA cut the longer MA when the longer MA is moving up, is upward sloping. The slope, the steeper the slope, the more reliable the signal is. Okay, so I hope this sharing on MA will benefit you guys. Okay, so let's go. Okay, before I leave MA, maybe one thing I can also share is a bit on the exit lah. Okay, so exit actually same lah. Okay, so when price cut 50 MA, okay, you may also want to consider taking profit lah. Okay, or maybe partial profit or things like that. Okay, but this is a topic for another day. So today we are mainly concentrating ourselves identifying potential stocks. Okay, entry and exit. Maybe we can collaborate with the investing node Malaysia team again for another webinar in the future. Okay. Okay. So let's go back. Let's go back to this slide. Okay. 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 So the next thing. Oh, this is very interesting. The next thing I want to share is actually price action. Okay, just now I did mention that actually, for indicator, right, I use it very sparingly. Okay, it's just to complement, okay, my investment decision. Okay, the real deal for me in terms of technical, from the technical aspect, is actually price action. Okay, so what is price action? Okay, as the name suggests, it's simply the movement of the price over time. Okay, be it whether it's open price, close price, the high of the day, the low of the day, they are all important data. Okay, and some of the example of how people use price action is support and resistance. Okay, in this case, I'll call it historical price support and resistance, which I'll touch on later. Okay, trend line. Okay, trend line is plot on the chart itself. Okay, the price action itself. Of course, chart pattern. There are so many chart patterns in the world, like head and shoulder, okay, inverted head and shoulder, ascending triangle, cup and handle, and all these things. Okay, but actually you don't need to remember the name of all these chart patterns. Okay, the more important point, okay, is to understand the investor psychology behind the chart. Okay, I just now I have stressed on this again. I stressed this earlier. Okay, so the chart, okay, don't just follow blindly the chart on you know, the criteria of the technical indicator, like wow, RSI below 20 is a buy, RSI above 50 is a sell. Okay, it's an oversold or overbought or things like that. Okay, we must understand the investor psychology behind it. Okay, and price action is the investor psychology in its rawest form. Okay, the most raw form. Okay, so why price action? Okay, because price action is very simple. Okay, you don't need any indicator. Not say you don't need lah. Indicator is the supporting cast. Okay, the page lah. Okay, price action should be the main cast. Okay, the main lead lah. Okay, why? Because it is the data in its simplest form, in its most raw form. Okay, and the price itself, okay, will show you the buyers and the sellers and who is controlled. Okay, today is not a basic TA course, so I will not go into things like candlestick or bar chart and things like that. Okay, but essentially what I mean is that a green bar, okay, it means that buyer is in control because buyer open low, they buy up, okay, the seller getting less, that's why they close at a high. And a red bar means that the seller is in control. Okay, this is just a very brief example of how price action shows that the buyer and the seller who are in control. Okay, And price action also represent the collective belief, the knowledge, and the action of the market participant at any point in time. Okay, so at this point in time, there are so many people buy this share because they believe so, because they know something, and they take action. Okay, so price action is actually one of the you can also Google this lah. Actually, now a lot of advanced traders they usually use price action. Okay, they use technical indicator as a supporting cast, but price action as the main lead now. Okay, okay, okay. So I try to make things a bit more interesting. So let's go to the chart again. Okay, okay. Let's look at these. Okay, let me minimize the window again. Okay, let's look at these chart of city development. Okay, why do I choose a city development to show you guys? Because there's a lot of movement. Okay, so it's easier for me to illustrate my point. Okay, so very quickly and very simply, I just want to show you guys. Okay, let's start from here. Okay, let's start from this point here. Okay, so what happened is that every drought and every peak, okay, represent a historical price support or resistance. Okay, and if you have two that's of almost the same level, it reinforces that support level. Okay, just like this one is it reinforces the resistance level. Okay, if you have two of almost the same the same level. Okay, and why are they support and why are they resistance? Okay, so very simply, right? So let's say we take it, we start from here lah. Let's say we start from here lah. Okay, so in this case, right, it means that the buyer is actually in control. Okay, so the buyer has been buying up the stocks from a level of about $5 plus because they deem that for whatever reason, maybe they think that oh $5 is very cheap already. Okay, or maybe they know something that we don't know or the market don't know. They buy up, okay, so that's their belief, their knowledge, and their action. Okay, so they buy up. But they come to a point where it's about, say, this is about 770, okay, where they'll say, oh, okay, now they have risen from about $5 plus to $7 plus. Okay, it's a bit too high. Okay, so the buyer will be getting less and less. Okay, especially those who bought around here. Those who bought around here, okay, maybe they will want to take profit or maybe they will not buy more. But those who buy here, okay, they'll be a bit concerned. Okay, so at this point in time, right, the seller will start to take control again because the buyer think that oh this price is too high already. Okay, so the sellers start to take control, and so on and so forth. Okay, so this is a basic explanation of support and resistance. Okay, so when you have 2 points that is the same, okay, it indicate that it is stronger support or stronger resistance. Okay, in this case support, in this case resistance. Okay, okay. The next thing is that chart pattern. Okay, I don't know whether you guys have already seen some of the chart pattern in this chart already. Okay, maybe I can share with you some. Okay, what I see is a double bottom here. Okay, a double bottom here. So this will be the neckline. Okay, this will be the neckline. This is the bottom. Okay, so what it means is that, first of all, the seller is taking control. Okay, they sell all the way to this point. Okay, where maybe the seller think that it's too low to sell already, or maybe they already don't have any share to sell already for whatever reason. Okay, then the buyer will start to go back up, but very fast. Okay, the seller take control again. Okay, but at the same point again, just like the previous drop, right? Once they hit this level, the seller is not selling again, and the buyer take control again. Okay, so this is what we call a double bottom. Okay, and a bullish a signal will come here. Okay, a signal will come here when they break out of this what we call a neckline. Okay, this is what we call a neckline. So to identify potential stop based on technical, right, based on price action, right, these are points that you can take it as a signal, as a sign of that this company is good. Okay. The other pattern that I can see here is an inverted head and shoulder. I don't know whether you guys saw already. It's actually here. Okay, so as you can see, right, this one will be the head, this one is the shoulder. Okay, and if you plot this line together here, right? Okay, maybe I should use a straight line. Okay, I use a straight line. So if you plot a line here, right, you will see a parallel line here. Okay, a parallel line here. Okay, and this is what we call the neckline. Okay, so again, to identify potential stop, this is the point where we should be looking at. Okay, this is the point where we should be looking at. Okay, so this is how we can identify potential stop based on price action. Okay, of course, there are also other elements, like as I mentioned earlier, you have to use collectively, which I will also show you later in the later stage, in the later slides. Okay, so yep, so this is all on price action. Okay, so okay, maybe I'll just add on. If you notice, right, here, right, this range, right, just now the 50 MA is also above the 200 MA. Okay, the 50 MA is also above the 200 MA. So it coincides with what I said earlier. Okay, so this is what this point is when you see this point, you can identify it as a very strong potential stop because there is a confluence of both MA crossover and price action. Okay, slash chart pattern. Okay, so when you see there is a two confluence of both factors, this is actually a very big, a very important signal. Okay, okay, so this is all for the price action. Let's go back to the slide. Okay. Okay, next is potential catalyst. Okay, you see, guys, I have shared that a potential stop must pass certain fundamental criteria. Okay, I have shared that what to look out for from a technical point of view. Okay, that the stock is going uptrend. Okay, that's why it comes as a potential stop. But now the question is, without anything on hand, okay, how do you know which chart to look at, which stock to pick? Okay, you can't possibly go from A to Z, you know, A stocks, oh, the fundamental is like that, oh, the chart is like that, B stock is like that. Okay, so you cannot possibly go one by one to filter out the stocks. Okay, so you must know, you have to know, okay, which chart to look at, which stock to look at. Okay, so without any clue idea, how are you going to do that? Okay, for me, right, personally, right, this is actually the most important point. Okay, potential catalyst. Okay, because this is the primary way of stock picking. Okay, to be frank, there are actually only two ways. There are only two ways to pick a stock. Okay, number one, potential catalyst. Okay, the other one is using a filter. Okay, a filter, a screen filter, a screener, I'll call it. Okay, you can program it. Okay, like for example, oh, okay, if RSI is below 20 or when 50 MA cross 200 MA, what are the stocks that come out, you know, they filter out. Yes, in the market, they have this program. Okay, but number one, they are pricey. Okay, you need to pay for it. Number two, I assume that if you are not a full-time investor, how are you going to spend all this time to filter out all the stocks? Okay, so it's virtually impossible, not say impossible, but it will take a lot from you if you are not a full-time investor. Let's say, for example, you have a full-time job. Okay, then you just want to invest, okay, to grow your money, to make your money grow harder, work harder for you. Okay, but you have a full-time job, you cannot spend too much time checking from stock A to stock Z. And obviously you wouldn't want to pay money for any filter. Okay, so one very simple way that you can do by yourself is potential catalyst. Okay, so potential catalyst means that is something that is that might or that is being projected to happen to the company. It might or might not happen. Okay, that nobody knows. Okay, but there is a news on it. Okay, there's a catalyst on it. Okay, so catalysts usually come from news or official announcement or even research reports. Okay, for example, if you read the newspaper every okay, now nobody read newspaper. Let's say if you read Channel News, you read Channel News app, or you read Business Time app. Okay, or they will say, oh, okay, this company is taking over the other company, kind of thing. So all these catalysts come from news. Okay, another source of the catalyst can come from is actually from official announcement. Okay, so as a listed company, right, especially in Singapore, whatever you do, you need to announce it on the SGX website. Okay, so you can go to www.sgx.com/company announcement. Okay, to look out for announcement news. Okay, this will take you like maybe what 15 minutes, 20 minutes every day if you are really into investing. Okay, so at least this is a very it's actually faster way lah. I'm assuming that you have a full-time job. Okay, catalyst can also come from catalyst also information. So information can also come from research report. Okay, but research report, I have to stress this. Okay, for research report, okay, focus on the content, not the recommendations. Okay, why? Number one, okay, the recommendation, okay, is the subjective view, okay, of it's the subjective view of the analyst itself. Okay, that's number one. Number two, okay, they always have update to the research report. Okay, although the target is 1 year target, but they always renew it like maybe in 1 month time or 2 month time. Okay, so the target price is always moving. Okay, so do not reach too much into the recommendation. Okay, rather look at the content. Okay, I said earlier already, we are investors. Okay, we are not analysts. Okay, the analyst job, okay, is to extract information of the company and put it out in the research report. And we investors are supposed to use the information, okay, to form our own decision, okay, whether to buy or to sell. So the content is very important. Okay, like for example, just now I shared Sampawang Corp industry. Okay, so research report, the one that I read, okay, they will say that, oh, okay, Sampawang Corp industry, they are moving to renewable energy sector. Okay, and because of the Ukraine war, electricity price has chewed up. Okay, and they are in the business of providing electricity, especially in Singapore and India. Okay, so these are information that comes from research report also. Okay, so these bit of information are catalysts. Okay, catalysts. Why? Because obviously, if electricity price goes up, and they are in the business of providing electricity, surely they will have a positive impact on their bottom line. Okay, that's for sure. Okay, one thing I need to really stress out is that not all Tom, Dick, and Harry news and announcements are worth to note. Okay, number one, okay, make sure you read news from reliable news media like Business Time, Channel News Asia, okay, Bloomberg, Reuters. Okay, don't go and read from some unknown source. Okay, because you don't know whether that's fake news or not. Okay, number two, even if you have read from Bloomberg or Reuters, right, read carefully. Okay, because sometimes they say, according to source from certain, okay, or according to unknown source. Okay, these are red flag already. Okay, so the news, while it's good to take note, it may not be the catalyst that we are looking for. Okay, so these are things to take note. Announcement also. Okay, sometimes when there's a fake news, right, or rather not fake news, there are rumors, we call it. Okay, I give you an example. Like for example, there's this REIT called Fraser Hospitality Trust. Okay, So back I think about June this year or May this year, there is a rumor that they'll be privatized. Okay, but because of the wording of the news article, okay, Fraser Hospitality Trust actually came out to clarify to say that, oh, they are only in discussion. No, no confirmed agreement has been reached. Okay, so this itself is a catalyst already. Okay, because first of all, there is some news. Secondly, the company deemed the news to be relevant enough to make a clarification. And thirdly, the clarification is that they are already in discussion. Okay, yes, it might happen or it might not happen, but chances are good because they are already in discussion. Okay, so these are things to take note. Okay, okay. Actually, I think I go too fast ahead. Okay, I actually cover all this already. So filter, research, and assess. Okay, first of all, you need to filter the news. Okay. Usually for me personally, I prefer to for investment, I prefer big cap or maybe some mid cap. Okay, I don't really want to look at small cap because first of all, small cap, the news could be just a turnaround story or fresh in the pan. Okay. Uh, I don't know whether you guys is aware or not. There's actually this very small listed company in Singapore called NutriFarm. Okay, so there was a news that they actually go into Malaysia and go into durian business, and they are making good money because durian at one point in time is the price is going up. Okay, so the share price actually went up. On the chart, it looks very good. But what happened now? They are actually being suspended and going to be released soon now. Okay, because they are small cap. Okay, despite the good news, their bottom line is not strong enough. Okay, so yes, they venture inside to other business like durian business, but maybe it's not making money, or maybe there's something that we don't know. Okay, maybe because the scale of that business is very small compared to the whole. Okay, so usually I look at big or mid cap. Okay, and of course you also have to filter whether the impact is big. I mean, if you just said that this company is you know, looking to add a business that they are not familiar with, then the impact may not be so big now because they are not familiar with the business. Okay, things like that. Okay, then news source I mentioned just now, look for Bloomberg, Reuters. Okay, this is one point that I have not I have not mentioned yet, liquidity of the stocks. Okay, okay. Sometimes when there is news on certain stocks, maybe some big cap. Okay, okay. I give you a very good example. In Singapore, we have this company called Jardine Strategic. Okay, and Jardine CNC. Okay, okay. So whenever there are news on Jardine CNC, yes, it may be good news, but because Jardine CNC, the liquidity is very low. Okay, so when the price open, okay, the bid and the ask may be very far. Okay, so you may be forced to buy at a higher price. Okay, and even if you manage to buy at a lower price, you have to consider that even if the good news were to materialize, right, how are you going to exit? Okay, because there are so few buyer and seller. Okay, we are in the market, we invest to make money. Okay, so even if the company is good, okay, the news is good, okay, even the technical is good, the fundamental is good, but if the liquidity of the stock is very low, then you really must consider a bit lah. Okay, unless you really have the holding power, to keep on holding the share for very long term. Okay, that's another story. Okay, so research, okay, as I mentioned just now, so you really need to first of all, you need to do a second level check on the reliability of the news to see whether the company will release any clarification or any company statement through the SGX announcement page. Okay, then people dive into the impact to see whether the news, whether it's really positive or not, and how positive it is. Okay, I actually have a few examples later. Then I will show you why this is important. Okay, sometimes sometimes the reporter or the company itself they like to have a fancy headline. Okay, they like to give you a very fancy headline, but actually there are a lot of information that is in fine print, or not fine print, but maybe in the bottom of the article that maybe if you don't really read, you won't read it. Okay, so you have to read on a you have to do a deeper dive into the impact, whether it's really positive or not. Okay, and of course, likelihood of that happening. Okay, like for example, Singtel divestment. Okay, for those guys who have attended my previous webinar on catching the stock, catching the rebound in the bear market, I did mention a bit on Singtel divestment. So what happened is that Singtel actually divest a lot of companies, but each time when there's news of this divestment, right, they will always come out, okay, to make a clarification, just like the clarification that I said earlier. They should, oh, they are in discussion, but nothing is being confirmed kind of thing, okay. But in the end, it did materialize, it did happen. Okay, so you have to assess yourself. Okay, you have to research on what is the likelihood of that catalyst happening. Okay, last but not least, you have to assess. Okay, first of all, risk reward. Okay, you see, if the company if the company have a news, the chart is good, the fundamental is strong, but the price has already went up so high already. Then is it really worth the risk to buy high and try to sell higher? Not forgetting that when you buy high, your risk is also higher because there is more room for you to drop mark if the news don't materialize. Okay, so risk reward, whether it's worth it or not. Okay, and whether your target profit is more than your calculated risk. Obviously, if the share price is already very high, then it may not worth the risk lah. So that's what I'm trying to say. Okay. Entry level. Okay. So when the news come out, sometimes in the stock market, no matter there's no perfect market in the stock market. Okay. So there is always news leakage. Okay, meaning there's some leakage of news somewhere, somehow. Okay, so by the time when they make the announcement, okay, or the news come out, okay, has the price move up already? If you already move up already, then maybe you want to consider again, reconsider whether it's a good time to enter or not. Okay, then you also have to see whether the level, the share price, right, whether it's bottoming out or whether it's stoppish. If it's stoppish, maybe you want to consider. If it's bottoming out, I think there's a good chance. Okay. Okay, the last point is actually not in the scope of today's webinar, but I still want to add it because it's so important. Okay, contingency plan. Okay, stop loss, trailing stop. Okay, this is a very important things to note, be it whether you are trading or investing. Okay, stop loss. Okay, whether you are looking at the fundamental, you're looking at technical, or you're looking at potential catalyst, things can always go south. Okay, so always have a stop loss. We always have a stop loss. Okay, like for example, 2020 pandemic. Okay, a lot of company came down. Okay, a lot of value dropped a lot. Okay, so if you're holding big pre-pandemic, right? If you would have to have a stop loss level, maybe you would have sell first, maybe you make some losses, okay, and buy back again when things are getting better. Okay, so these are things. What I'm trying to say is that yes, when we do a stock investment, we hold a long-term view, but we always have to be nimble. Okay, there's no 天长地久 lah. Okay, there's no long term. Okay, because things change very fast nowadays. Who would have thought the pandemic would have such a big impact on the stock market? Who would have thought President Putin, okay, will invade Ukraine? Who would have thought 3 years ago, or rather 4 years ago, President Xi Jinping will do a cap on all these Chinese technology company like Tencent, Alibaba, Pinduoduo, Didi. Okay, so all these are events that we cannot foresee. Okay, so even though you are doing a long-term investment, okay, always get ready. Okay, always get ready to get out if things go south. And this is where this trailing stop is a very good alternative. Okay, we are not into trading today, so let me just do a very quick explanation of what trailing stop. Trailing stop means that whenever the share price goes up, right, you always have a stop loss that's adjusting higher one. Like for example, if the stock price move from $1 to 150, okay, then you put a stop loss at 140. Okay, and when the share price moved from 150 to $2, you increase your stop loss to maybe 180 or 190. Okay, so on and so forth. So that's what we call a trailing stop. I think that is one of the best strategy for long-term investment, because long-term investment means that you guys have a full-time job, means that you guys are busy looking at the market every single second, every single minute. Okay, so trailing stop will ensure that you have a peace of mind. Okay, and if the stop is being triggered, at least you know that it's a profit. Okay, so okay, now let me give you some example of I always like to give example, real life example, or use real chart. I don't really use self-drawn chart and things like that. Okay, I use real chart and real news. So what happened is that this year, just recently, only October, 2 months ago, when SIA say that they want to redeem their MCB, mandatory convertible bonds, okay, it is deemed as a positive catalyst. Why? Because this was announced just 1 or 2 weeks before the result announcement. Okay, as I mentioned earlier, right, from 2020 to earlier part of 2022, SIA has been losing a lot of money. Okay, if not for government support, if not for the right issue, if not for the MCB, the all the bonds, all the equity financing kind of thing. Okay, and on 26th October, right, when they say they want to redeem this MCB, it means that they have already have a lot of cash. Okay, a lot of cash already, and that gives us an indication that the following week's result announcement should be good. Because if it's not good, how are they going to redeem this MCB? Right or not? So actually, they are already giving you a hint. Okay, so these are the potential catalysts that we should be looking at. Okay, and we must interpret it. Okay, because they released just 1 week before the result. Why don't they announce it 1 week after the result? Okay, because they want to have this positive effect. Okay, so these are the things that we need to know. And what happened was that when the news came out on the 26th of October, right? Okay, as you can see from this chart, the share price actually went up. It actually shoot up. Okay, because it's very close to the result announcement. Okay, so if I'm not wrong, this is the result announcement. So when the result announcement, they actually shoot up. Okay, before the things come down again. Okay, so these are things that you want to take note. Okay. Okay, another example is Thai. Okay, this is also very recent, just last month. Okay, so result announcement is also a catalyst. Why is it a potential catalyst? Because apart from result, they will usually tell you what is their outlook, okay, what are they have done and what they're going to do. Okay, usually that's the case. Okay, so in this case, right, okay, they actually have a higher final dividend being proposed. Okay, and the profit is up lah. Imagine during a pandemic, okay, when they are locked down and there are border restriction, okay, they actually can turn in the profit within 2 years. Okay, the pandemic struck in 2020, now it's 2022, and the full year 22 profit is already up to 2.2%. Means that they are already on the road to recovery. Okay, and what happened is that since they announced that the price actually shoot up. Okay, this chart is actually taken I think sometime last week. Today, right? We are the share price is actually around here already, 68 cents. Okay, it's around here already. Okay, so these are the catalysts that we can really take note of. Okay. Okay, another one. Okay, so I believe most of you, or rather those who are familiar in Singapore market, will have heard that TAPS is going to take over these worldwide flight services. Okay, so worldwide flight services is a very big company, even bigger than SATS in fact. Okay, so they are all into luggage handling in Europe. Okay, they are predominantly their market in Europe. Of course, they also have business in other places as well. Okay, so when the news came out, right? Okay, it actually portrayed SATS as a small fish taking over a big fish. Okay, so it's supposed to be a good news. Okay, so logically, right, you think that it's good news, right? Okay, but you look at what they say on the small fine print here. Okay, so the acquisition is to be financed with 1.2 billion equity raising. Okay, what is equity raising? Equity means that they need to issue rights. And what happens when you issue rights? it will dilute the shares. Okay, it will dilute the share price. Okay, so despite they said that okay, the deal is transformational. Okay, it's good for the company business wise. Yes, business wise is good for the company, but maybe 2 years or 3 years or even 4 years down the road. Okay, but at this present moment, okay, near term, we have to focus on the equity raising. Okay, it means that the share price will be diluted. Okay, so what happened next was that the share price actually just gap down. Okay, it gap down from about 380, 390, okay, all the way 340, and they have never turned back. Okay, it's all the way down. Even until today, right, they are still about $3 lah, about 280 lah, $283. Okay, it's still around here. Okay, so this also reinforces what I said earlier. Okay, number one, okay, you need to know whether the news is positive or not. Number two, you need to do a deeper dive into the impact. Okay, don't just read the headline. Okay, because the reporter or anyone, they always give you a fancy headline. Okay, make sure you read the article or the fine print as well. Okay. Okay, so basically, right, I have covered my main 3 ways of identifying potential stocks. Okay, so just to recap, right, first of all, they must have some fundamental criteria. Okay, okay, then they must on the chart, okay, they must have some indication of uptrend. Okay, in my case, moving average, the short-term 50 MA should be above 200 MA, and it will be good if they have broken off their support, or broken off their resistance, okay, and trending up. Okay, so these are the few things. Okay, let's do a case study on Capital. I don't know whether I still have time. Okay, I still have some time, so maybe I can do a very quick one on case study on this Capital. Okay, for those who have attended my previous webinar on catching a rebound in a bear market, right? Capital is actually one of the companies that I mentioned. Okay, so these are slides from the previous webinar. I will be very quickly go through it. Okay, so actually, back in 2020, they already tell you that they are going to have a master plan. Okay, Vision 2030. Okay, and they have over the years, right? Over the past 2 years, this announced in 2020. So over the years, they have been working towards it. Okay, and just this year alone, suddenly there is a lot of news. Okay, so under the Vision 2030, one of the aim, okay, is to divest away all the non-core business, okay, and focus on some more of the recurring income and some of the core business. Okay, so this year March, right, they already announced that they want to divest their logistics business. In April, okay, they 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 are talking about divesting of this Capital O&M to Sembcorp, okay, because they don't want to remain into this oil and gas already. They want to go into renewable energy. They want oil and gas to be a small part of their business. Okay, they are looking more into renewable energy. Okay, so these are also from previous slide. So as you can see, just this year alone, there are so many news. Okay, so they take over a waste management service a company in South Korea for recurring income. Okay, they invest in European some Europe wind energy company. Okay, they even acquire major stake in this company called 800 Super. So basically, 800 Super is more of the waste management. Okay, so they have been transforming their business already. Okay, so okay, just give me about 1 minute to show what I have said during my previous webinar. Oh, okay, for future rebound. Okay, let me see. Sorry. Let me just okay. Before 2020, they have always been trading in the range. Okay, and at the turn of the year, suddenly they just boom, just go up. Okay, and that's because of a lot of divestment and and the new acquisition that I just showed you. Okay, so they have been moving. So with every pullback, right? Sorry. So with every pullback, right, we see another surge up. Okay, it wasn't until the last few days where we see they drop out of these uptrend line. Okay, but they're still within this consolidation. Okay, but today, right, this is updated a few hours ago. Today, they actually briefly went back up before coming down again. Okay, same like the previous two chart. I think this one counter that I will look to position myself. Okay, for future rebound. Why? Because I can see that with all these news-driven event going on, right? Even if things were to worsen, I think it should be around this region. So this region will be a very good level to look to position ourselves for future rebound. Okay, so okay, let me just go out. So this is actually a snippet of my webinar, my previous webinar. Okay, so how has this Capital Corp performed till date now? Okay, so let's see. Okay, give a minute. Let me just go to my next slide. Okay, so let's visit Capital Corp chart. Okay, so this is a live chart, or not live chart now. This is updated until today now, because I'm actually at this investing note chart page. Okay, I mainly use investing note chart because actually their chart is very good. They have a lot of features here, so you guys may want to hop over there and do your technical analysis on this investing note page as well. Okay, coming to that, right? Just now in my previous webinar, right, I showed you guys a small snippet, okay, which I said, okay, then this is the place where we look to position ourselves for a rebound. Okay, so lucky for me, and indeed they actually rebound all the way up lah. Okay, so how do I identify Capital Corp as one of the stock to look at to catch in a bear market? Okay, so I'll apply what I have said earlier in this webinar on this chart itself. Okay, so okay, just give me a minute. So okay, you see what happened is that fundamental, okay, fundamental check, okay, because this is a conglomerate, is always profit making. In its latest statement, they are actually making profit. Okay, then the next is moving average. Okay, so as you can see, right, the green line is actually the 200 moving average, and the orange line is actually 50 moving average. So in the moving average, okay, the 50 is also above 200. The price is also above 200. Okay, moving average crossover, I should say. Okay, so the third thing I shared is price action. Okay, so as you can see, right, as you can see, we break above these I would say these resistance level. Okay, so when the vision 2030 was first announced, right, the share price has actually been moving sideways lah. Okay, most of the time. Okay, it's only until this year, okay, 2022, where they start to move up. Okay, so in terms of price action, right, one of the main way of identifying this stock is that you see here, right? You see here, so first time they try to cross, they fail. Second time cross, fail. Third time cross, also fail. So finally, together with the news, the March news that I showed earlier, okay, it actually start to break out already. So this is one sign. Okay. Second sign is that when they go up, right? Okay, it also confluence with the moving average crossover. Okay, it means that there's a golden cross here. Okay, golden cross here, and the 50 is above 200. The price is also above the 50 and above the 200. Okay, so this is how I identify this Capital Corp as one of the stocks to catch in the rebound in my previous webinar. Okay, so yeah, so this is how I identify stocks lah. Okay, so hopefully this is useful to you. Okay, and hopefully we will add some value to you guys. Okay, so okay, I'm coming to the end of my webinar already. Okay, but before I end it, I want to share with you some guiding principle lah. Okay, these are the few things to conclude for this webinar. Okay, some very guiding principle to note. No man is an island. Okay, so there's no one single way or one single indicator or method of identifying potential stocks. Okay, you need to use it collectively, not individually. Okay, it doesn't mean that okay the MA crossover is good means you have to buy already. It means that that's a potential stock. Okay, you have to use it together with price action, with some fundamental, with some potential catalyst, or whatever indicator or whatever method that you use. Okay, they have to use it collectively, not individually. Okay, second guiding principle, I also mentioned earlier, okay, we have to be nimble. Okay, you can be a long-term investor, okay, but you must always be ready, okay, to take profit when things go south. Okay, as I mentioned earlier, now the world is changing very fast. Okay, it's no longer like everything is constant. Everything is they just everything will just happen as you go along. Okay, a lot of things, unforeseen circumstances can always happen. Okay, the third guiding principle, which is not shared in this webinar, because this is a very big topic, it will be on our is your exit plan. Okay, we must always remember, okay, this is something that I always tell my clients. You only make money when you sell, not when you buy. So it's not enough just to identify potential stock. Okay, you must know when to take profit also. Okay, but that will be a topic for another day lah. Okay, so okay, I have almost come to the end of my webinar. So give me about 2-3 minutes for some advertising, or advertisement. Okay, so in Bullish security, right? So what we have offered here, okay, is that we have a investment solution for everyone. Okay, if you think that you are capable of doing your own investment, okay, we have Poems, okay, which is a self-trade platform. Of course, with me as a broker, then you can always ask me anything that you need to know. Okay, I'll be in charge. Okay, if you are too busy, okay, you can also go for the advisory services, okay, where there is some advisory fee, okay, but I manage your stock portfolio for you. Of course, if you are those who are very busy and really no time to look at the market, you just want to put your fund with someone else and for them to invest for you, we have also professional portfolio managers here, okay, in managed account. Okay, so to open a trading account, right? Okay, if you like to open a trading account with me, okay, you can just go to this link, okay, www.polio.com.sg, open an account, PRVZ. I think it's too difficult to click on to write down the link, so you may want to take out your handphone and scan the QR code here. Okay, for Malaysian, right? Actually, it's very simple. What you all need is the things here. Okay, so Malaysia IC, you need a bank account information. Okay, then things like that lah. Okay, if you have worked in Singapore, you have a SingPass, you can also open using a SingPass. Do remember to put down my code VZ, okay, Victory Zone, okay, TR code. Okay, of course, we have a different kind of account. We have a CDP link account and a custody account. CDP link account means something like CDS account like that in Malaysia. Okay, so there are some there are actually pro and cons for each different kind of account. Okay, so for CDP link, which a lot of Malaysian investors like about this is that the share will be in your own name. Okay, the share will be in your own name. The dividend and all the corporate action is handled by CDP, so it's free of charge. Okay, for those who are more into trading, okay, you want to take advantage of the lower brokerage. Okay, we also have various custody accounts, but the share will be custodized under Bullish security and something may apply. Okay, so if you don't have a CDB account, this is not under me, but this is more like additional service. So if you want to if you don't have a CDB account and you want to open one, do take out your handphone, either take a picture or scan the QR code here on the bottom left hand corner. Okay, do take note a Singapore bank account is required to open a HIN account. If you don't have a Singapore bank account, you can PM me, okay? Then I'll share with you how you can open one. Okay, I actually shared it in my previous webinar, but due to time constraint, I shall not put too much on emphasis on it down here. Okay, of course, if you want advisory service, we do have this advisory service with me being the advisor, okay, to advise you on your stocks, okay. Do take note that there's some advisory fee, although brokerage is lower, okay. The good thing is that whatever buy or sell, right, the final decision is the investor themselves, okay. So for this security advisory, right, I only do advisory, but you are the final decision holder, okay. And for those who are really too busy, okay, they just want to put aside of money for other people to manage. What better way to let professional portfolio manager to manage for you? Okay, we have a managed account as well, and we also have robo. Okay, so if you are starting out, if you are a young adult starting out, okay, you may want to put aside a small sum, okay, and you want a robo service. We also have really smart portfolio. Okay, so it's based on certain cyber mythology. Okay, that's being implemented over at our pretty small portfolio. Okay, we have 4 different type of portfolio. Okay, income growth, portfolio growth, and of course the US equity. Okay, so I come to the end of my webinar. If you have any question, you can always contact me. Okay, my contacts are here. Okay, you can also find me at Investing Note. Okay, Active Trader Club. Okay, you can just post there and talk to me. Okay, if you are too shy, you can always WhatsApp me, Telegram me, or even email me. Okay, so with that, I come to the end of my sharing already. Okay, back to you, Daniel.
Yeah, sure. All right. Thanks, Dan. Um, uh, Thank you for the sharing, and I believe it's very insightful for all of our audience here, lah. All right. So before we end the webinar, just let me do a quick sharing on some of this information. Definitely. If you want to get if you want to invest in Singapore, definitely we will recommend like go and approach Dan. So Dan, do you want to put in some of your contacts or link in the comment section on the chat session? And then, all right, I think he's off already. But all right, so maybe let me go forward. So if you are a Malaysian and you would like to invest in Singapore market, so there's we are prepared some of this info here. You can actually refer to your broker. So definitely, if you are going for Philip Capital, do refer with Dan for the brokerage service. All right. So lastly, just a quick sharing. So like mentioned at the beginning of the webinar, so we actually have a Telegram group which is called the Stock Market Buddies. So if you have not heard of it, you can actually scan on this QR code and also enter to our Telegram group where we will be sharing different stock insights and information. Okay, so other than that, you also can visit us in Investing Note, which is the largest investors community in Singapore. So do come and visit us. We have a lot of very experienced investors like Dan himself is actually sharing quite actively in this community. All right, so with that, I think it's the last slide for me, and we would like to thank everyone for joining the webinar today, and we'd like to thank Dan for sharing the some knowledge to our audience as well. So we'll see you soon in the next webinar. All right, okay, goodbye.
Bye bye.